Hello. Now I am going to explain you the problem as I explained you the different items in the earlier class. Journalize the following transactions of Mr. Nag. On the January 1st, 2018, we have transaction. Mr. Nag started business with cash. Mr. Nag started business with cash, rupees 45,000. So the first step is we have to identify the two accounts. We have to identify the two accounts. Mainly we have two accounts here, Mr. Nag and one is cash account. Mr. Nag and one is the cash account. Okay, so we have identified the two accounts. We have to classify those accounts into the real, personal or nominal. Here Mr. Nag is a personal account because he is a person, and the cash account, it is a real account. It is a real account. So as per the rules of the real account, what is the golden rule of the real account? Debit what comes in, credit what goes out. Debit what comes in, credit what goes out. So as per the golden rule, we have to debit because cash is coming into the business. Cash is coming into the business. So we have to debit. So we have pro forma here. The first one is, it is the date. It is the date. Okay. It is a particulars. It is the particulars. Ledger folio. It is the debit amount. It is the debit amount. And it is credit amount. I hope you all understood. So this is the date, this is the particulars, this is the ledger folio, this is the debit, and this is the credit. So the date is the January 1st 2018. January 1st, this is the 2018, right? So first step is the transaction is Mr. Nag started business with cash. Mr. Nag started with cash. So we are debiting the cash because cash is coming in. As per the real account golden rule, what debit what comes in. So cash is coming in, we are debiting the cash account. Cash account debit. 2, we have identified Mr. Nag. Mr. Nag is a personal account. As per the personal account, debit the receiver and credit the giver. So here Mr. Nag is the giver. We have to credit the Mr. Nag account. Amount is 45,000. So what is LF? LF is nothing but a ledger folio. Ledger folio is the sequence number of transaction in the ledgers. Now initially it is not required to fill the column of ledger folio. Since we don't have any kind of sequence numbers of the particular transaction in the ledger, we don't have any sequence number of the ledger over here. So initially we have to leave it alone. Okay. So the now entry is cash account debit to Mr. Nag account. 45,000. And next. On January 2, purchased furniture worth rupees 10,000. Purchased furniture worth rupees 10,000. Okay. So we have to identify the two accounts over here. One is cash account, another one is furniture account. Cash account, furniture account. Both accounts are the real accounts. So what is the rule as per the real account? Debit what comes in, credit what goes out. Debit what comes in, credit what goes out. So as per the golden rule, what is coming in? Furniture is coming in. So we have to debit the furniture. On January 2, we are debiting the furniture. Furniture account debit. Furniture account debit. 2, cash is going out, right? Whenever we purchase a furniture, we are paying the cash. Cash is going out of the business organization. So we are crediting the cash account worth of rupees 10,000. So we have to write the narration even. So narration is nothing but a kind of summary of the transaction. Why the first? Mr. Nag started business with cash. So being Mr. Nag started business with cash. A kind of simple reason, a small reason for the transaction is called as narration. In the second one, what is the narration over here? Being purchased furniture. Being purchased furniture. Okay. On January 3, purchased goods worth rupees 5,000. Purchased goods worth rupees 5,000. Okay, so here they have mentioned the goods, but they didn't mention the nature of the goods. So we are not supposed to put the goods in any kind of journal entry in the account. Please remember, we are not supposed to write any kind of goods over there. Okay, so purchased goods worth rupees 5,000 rupees. So here we have to identify the two accounts. What are those two accounts? Purchases account, and one is the cash account. Purchase account, cash account. So both purchase is related to the expense. Expenses is nothing but it relates to nominal account. Purchase are the nominal account and cash is the real account. So what is the rule? What is the rule as per the nominal account? What is the golden rule as per the nominal account? Debit all the expenses and losses, credit all incomes and gains. So since purchase is an expense, we are debiting the purchases. On January 3rd, it is purchases account debit to cash account. It is worth of 5,000. Being purchased goods. We have here, yes. On 4th January, sold goods for cash. Sold goods for cash. So we have to identify the two items in the transaction. One item is sales and another one is cash. One is sales and cash. On January 4th, sales and cash. Sales, what about the sales? Sales is nothing but it is an income to the business. So income related to the nominal account. So what is the golden rule as per the nominal account? Debit all expenses and losses, credit all incomes and gains. So here sales, since sales is the income, we have to credit the sales account. So it is to sales account. To the sales account. So what we have to debit? So since we are selling some goods, we are receiving the cash, right? Cash is nothing but it is a part of real account. What is the golden rule of the real account? Debit what comes in, credit what goes out. Since cash is coming in, so we are debiting the cash account. Cash account we are debiting. Cash account debit to sales account. So what is the amount over here? It is 10,000. 10,000. Next. Yes. On January 5th, purchased goods rupees 3,000 from Mr. Bean on credit. Purchased goods rupees 3,000 from Mr. Bean on credit. What does it mean? Mr. Nag has purchased goods rupees 3,000 from Mr. Bean on credit. Okay, so what we have to do? They have not paid any kind of cash for the purchase. They have bought it. They have purchased it for credit. So whenever we purchase the credit, the person who sells the goods, the person from whom we purchase the goods is called as creditor. Okay. Creditor, he is the giver of the goods. Okay, he is the giver of the goods. So we have to take two persons over here, two items. One thing is purchases, and another one is Mr. Bean. So Mr. Bean is a personal account. What is the rule of the purchase account? Personal account. Debit the receiver, credit the giver. Here Mr. Bean is the giver, so we have to credit. We have to credit to Mr. Bean account. Mr. Bean account. So purchased goods, since purchase is an expense, expense relates to nominal account. What is the golden rule as per the nominal account? Debit all expenses and losses, credit all incomes and gains. So what we have to do? We have to debit the purchases. Yes. So the journal entry is purchases account debit to Mr. Bean account. So what is the amount? Amount is rupees 3000. 3000. Narration. Being purchased goods from Mr. Bean on credit. So this is a narration. So narration for above transaction is cash sales, being sold goods. I hope you are all understanding over here. Next. On January 8th, we have sold goods for credit to Mr. Shekhar. Sold goods for credit to Mr. Shekhar. Here we are not selling for the cash. We are not getting the cash over here. Here, Mr. Shekhar, we have sold goods for credit. Remember. Listen. Sold goods for credit to the Mr. Shekhar. We didn't receive any cash over here. So we have sold the goods. So who is the receiver here? Mr. Shekhar. Mr. Shekhar is a personal account. So what we have to do? Mr. Shekhar is a personal account. What is the rule of the personal account? Debit the receiver and credit the giver. So he is a receiver. Since Mr. Shekhar is a receiver of the goods, we have to debit the Mr. Shekhar account. Mr. Shekhar account debit to since sale is nothing but sale is a part of an income, so income is a part of the nominal account. We have to, as per the rule of golden rule of the nominal account, we have to debit all the expenses and losses and credit incomes and gains. So what we have to do? We have to credit the sales account. What is the amount of worth? Yes, you can see here. It is a 4000. Narration. Being sold goods on credit to Mr. Shekhar. Okay. I hope you clearly understood this journal entry. Since we are selling the goods for the credit, we are not getting any kind of cash. So we have to debit the person. Since he is receiving the goods, Mr. Shekhar is receiving the goods. Mr. Shekhar is a personal account. As per the personal account golden rule, we have to debit the receiver and credit the giver. Since Mr. Shekhar is the receiver of the goods, we are debiting Mr. Shekhar. And sales, another item is sales. Sales is nothing but sales is a part of the nominal account. As per the nominal account, we have to debit all the expenses and losses, credit all the incomes and gains. Sales is the nature of the income, so we are crediting the sales. So journal entry is Mr. Shekhar account debit to sales account. Yes. And the next transaction is on January 10th. On January 10th, we have transaction cash deposited into the bank. Cash deposited into the bank. What does it mean? Whatever the amount of the cash we get in the business, we are depositing into the bank. So we have to identify the two items here. One is cash and another one is bank account. Cash is the real account and bank is the personal account. So as per the real account, the golden rule is debit what comes in, credit what goes out. Debit what comes in, credit what goes out. So what here, cash is coming in or going out? It's going out. It's going out. So what we have to do as per the rule? We have to credit. Since cash is a real account, cash is going out, we are crediting. Bank account. Bank account is a personal account. Personal account, what is the golden rule of the personal account? Debit the receiver and credit the giver. Here bank is receiving the amount, so we are debiting the bank account. So journal entry is on the date of January 10. January 10. Cash deposited into the bank. So we are debiting the bank account. Bank account debit to cash account. Amount 2000. Yes, it's 2000. Okay. Narration. Being cash deposited into bank. Okay. Next. January. Next transaction. Next transaction. On January 13th, we have received cash from Mr. Shekhar. Why? Because we have sold the goods to credit. In above transaction, we have seen that sold goods for credit to Mr. Shekhar. Now we received cash from Mr. Shekhar. Rupees 2000. Received cash from Mr. Shekhar. We have to identify the two items. One is cash and another one is Mr. Shekhar. So we received the cash. What does it mean? Cash is coming in. So cash is the form of real account. So as per the real account, we have to debit what comes in and credit what goes out. Since cash is coming in, we have to debit the cash account. And Mr. Shekhar is a personal account. As per the personal account, the golden rule is debit the receiver and credit the giver. Since Mr. Shekhar is the giver, we have to credit Mr. Shekhar. So the journal entry is cash account debit to Mr. Shekhar account. Cash account debit to Mr. Shekhar account. Amount 2000. Being cash received from Mr. Shekhar. Now, on January 17th, cash withdrawn for personal use. What does it mean? So they required the cash, they urgently required some amount of cash. So urgently they have withdrawn from the business units for the personal use. What does it mean? Drawings. We have the drawings here. So drawings is nothing but it is a personal account. Drawings is a personal account since they are withdrawing the cash. So cash is going out. Cash is going out of the organization. So drawings is a personal account. Drawings, as per the personal account rule, we have the debit the receiver and credit the giver. So drawings is nothing but drawings is the receiving the part. So we have debiting the drawings. On January 17th, it's drawings account debit to cash is going out of the organization. So cash is a part of real account. So as per the golden rule of the real account, debit what comes in, credit what goes out. So cash is going out, we are crediting to cash account. How much? 3000 rupees. 3000. Okay. So January 17th, it is 3000. Now, paid rent. On January 20, we have another transaction, paid rent rupees 500. So paid rent, here we have to identify the two items over here, paid rent. So one is the rent and another one is going in the form of cash. So we have identified two items, one is rent and another is cash. Rent, generally whatever the rent is the nature of expense. It is a part of expense, right? So expenses comes under the nominal account. What is the rule of the nominal account? Debit all expenses and losses, credit all incomes and gains. So the rent is a part of expense as per the golden rule, we have to debit the rent account. So what about paid rent? What does it mean? Cash is going out of the organization. Cash is going out of the organization. Cash is the real account. So what is the rule of the real account? Debit what comes in, credit what goes out. Debit what comes in, credit what goes out. So cash is coming or going out? It's going out. So we have to credit the cash. We have to debit the rent account since it is an expense, and cash going out, so we are creating. So journal entry is on January 20, rent account debit to cash account. Okay, so amount is 500. Narration is being rent paid. For narration for above entries, being cash withdrawn for personal use. Okay, next. The next transaction is salaries outstanding. Salaries outstanding. Here we have two items. One is salaries and second one is outstanding salaries. We have identified two items. One is salaries and another one is salaries outstanding. So salaries is a part of expense. Salaries is part of expense. So as per the nominal account rule, we have to debit all the expenses and losses, credit all incomes and gains. So here salaries is the expense, salaries are expenses, so we have to debit the salaries. Then what about outstanding salaries? Outstanding salaries are related to the personal accounts. Since what is the meaning of the outstanding salary? Whatever the salary they have to supposed to pay at the end of this month, after completing of this month, they are supposed to pay the salaries, but they didn't pay the salaries which are related to this month. Due to many reasons, they may not pay the salaries. So the term used, the salaries not paid, related to current period, those salaries are called as outstanding salaries. So outstanding salaries, it is an obligation of the owner to pay the salaries. Since it is a personal account, he has to give the salary. What we have to do as per the personal account rule, debit the receiver and credit the giver. So what we have to do, we have to credit because he has to give it, right? So now the journal entry is